Hi guys, I'm Daniel LeBeau. Welcome back to the Fourth Revolution, where I discuss stocks for your portfolio of the future. Today we're talking about SPAC and some of the speculation that I've been seeing in the market today. I'm going to do this in two different parts. The first part, I'm going to discuss what a SPAC is and some of the value that it can bring to the markets. The second part, I'm going to talk about some of the moves I'm making to protect myself against some of the SPACs bubbles and some of the moves that could be made to create opportunity in your portfolio. So if you already know about SPACs, feel free to skip over to part two. But if you want to learn more, let's dive in. So what a SPAC is a special purpose acquisition company, and its special purpose is to bring private companies to the market. And they do it much quicker than a traditional IPO. They skip over the stringent underwriting process as well as the SEC's stringent overlooking process that goes into bringing a company to the public markets. It sounds a little bit shady, and a little bit is shady. They're allowed to market their shares contrary to what a typical traditional IPO is able to do. They're marketing their shares publicly on different media platforms like CNBC, and are able to really push their shares and show their narrative to retail investors, which traditional IPOs can't. Traditional IPOs just go to the big investment firms, the institutional investors, and they decide their fair value. Whereas a SPAC, their fair value is decided by the markets, and a lot of times, in recent days at least, has been decided by retail investors who have a huge appetite for risk and have driven a lot of these stocks way beyond their intrinsic value. So let's take a look at some of the stocks that have IPO'd through this untraditional SPAC process and what they've done and how they've performed. So Virgin Galactic is one of the big companies that IPO'd through Social Capital, Chamath's SPACs. Chamath is a man with six SPACs, and this was one of his first big ones, ticker SPCE. The deal was struck in October of 2019, but the stock really didn't take off to the beginning of 2020. And as you can see here, once it did take off, there was no end to its drive, going up all the way to $42, over $42 a share from the deal price of right around $10. Over four times its value in a matter of months. And you can see, obviously, there was the COVID sell-off here, but there's a ton of volatility in this kind of thing. The reason it spiked here was because of the story that Richard Branson told about this company. And this company is revolutionary. It's bringing the average consumer to space. I mean, maybe not the average consumer, the ultra rich consumer, should I say, to space. And this is an offering that's never been seen before. And you can see volatility continues throughout this company's trading history in the last 52 weeks. And its recent uptick here was because of the addition to Cathie Wood's, one of Cathie Wood's new space ARK ETFs, which she is creating. And, her ETFs have done tremendously well and have driven tremendous growth. And everybody knows anything added to one of her ETFs is going to get a big bid on it. And that's what you're seeing here with space today. 2020 was the hottest IPO market in history. And a lot of it was driven by these SPACs. So we had 454 companies go public last year, raising $167 billion, breaking the record of the dot-com mania in 1999, which had $107 billion generated. And 50% of 2020's IPO market generation was driven by SPACs. And these SPACs, according to Jim Chanos, CEO and founder of Cannicos Associates, says that there's $2 billion in market value being created by these SPACs on a daily basis. And this was as of mid-January, which would equate to $500 to $600 billion on an annual basis. And, these investors, these private equity funds and venture capitalist funds that are coming out with these SPACs realize that the euphoria in the market is not going to last for long. So they want to get their SPACs out fast, and they want to get their SPACs out in time for these retail investors to jump in before the market corrects itself and some of these bubbles, and tech specifically, begin to deflate. So check out my part 2 coming to you soon. So thanks for watching part 1. Don't forget to check out Zacks.com/promo for our latest promotion. Thanks for watching, guys.